So you are here, and it's a little bit of a different environment than it was in June. Emerging markets have taken a little bit of a hit. How is Poland holding up in this environment?
You see, first of all, I struggle to compare Poland to the emerging market because we do stand out. By the way, we just got to advanced by Russell FTSE last week. It was a big event which would give us an ability to tap into different pockets of liquidity. We have stable inflation, less than 2%. We have 5% growth, diversified growth, and contrary to some of the markets, other countries, we don't have FX lending in Poland. We have current account surplus. So I think we have emerged as an economy. The mood is very positive. Our bank, we intend to grow 10% this year.
Now, the difference between Poland's 10-year bond and US Treasuries, at the moment, it's only about 10 basis points of a difference. How are you appealing to investors to put money into Poland with all the currency risk that's attached, or some of the currency risk, when they could just pile into Treasuries for maybe 10 basis points less?
I think we do see a lot of opportunities. First, it's on the equity side. When you look at Polish banking sector as an example, we have very resilient sector. We have one of the largest growths in lending, and I think we offer a very good investment opportunity. Look at our dividend yield, Bank Pekao dividend yield. We are a very good proxy for the economy. Where we see a lot of opportunities is in sectors like manufacturing, real estate is booming as well. So what we see is there is quite a bit of interest from real money funds and private equity funds. We have very unique capabilities of structuring such deals. So I haven't seen a reverse of funds from real market, from real opportunities in the country.
Michal, can we talk a little bit about your share price and what's been going on? The average, I was checking this just before we came to air, the average 12-month price target from analysts on your stock is 138. You're currently trading kind of just north of 100 at the moment. Since you took over, the stock has underperformed the WIG. Talk to me about what you're going to do or what needs to happen to get the share price maybe up to that 138 and to get it back to in line with where the wider market is. What do you need to do?
Yeah, first of all, we have repositioned the bank. The strategy is very much focused on growth. It has traditionally been a dividend stock, and we still pay highest dividend in the sector. The strategy works. We already growing. We have 10% growth in SME. We have very big double-digit growth in retail. We haven't increased the cost of risk, which is I think very important. And digitalization is a big thing for us. We have already become one of the market leaders in terms of digitalization. We have 1/3 of all mortgages that get sold by one click. So I think this should increase EPS growth. And we have traditionally, as a bank, been less dependent on growth in interest rates compared to other retail banks. So I'm optimistic we will grow double-digit this year, and I'm convinced the sentiment around the share price should change as well.
Michal, when you talk to investors in New York, are they worried about the dispute that is taking place between Warsaw and Brussels?
Of course, the topic came up. And what we try to explain is, and this is the feedback we've been getting from our investors in Poland and our clients, is that the courts need to simply speed up the way they work. You see that there is a very big discrepancy. Poland banking sector has one of the best payment apps. Our app is one of the best apps in the world globally, and so is the case with other banks. Whereas when you go to the court, you would need to wait a couple of years to get your first or second sitting. So I think people are hopeful that the current reforms will speed up the way court works, and also we are watching what the verdict of the European Court in Luxembourg is going to be.